Dear friends, I am Asirvada Rao, retired Assistant Divisional Manager LIC. At present, I am a faculty member in insurance in various insurance institutes. This video lecture has been arranged to assist the candidates who are preparing for the pre-recruitment examination for agents. While we are stressing all the important points in this video lecture, we cannot claim that this is exhaustive. So, what exactly is exhaustive? Your training manager and your company will advise you. So, you be in touch with them and see whether any points are not taken care of in this video lecture, and those you try to know through your training manager and through your own company people. Please closely follow your company guidelines regarding what exactly is the matter you have to study and prepare for the examination, and that will be final because it will be the latest one also and it will be exhaustive also. So, this is only supposed to aid you in your preparation for the examination, and we cannot claim to be exhaustive. Now, we shall study chapter 1 of the IC 33 recently revised. Chapter 1 is how the insurance market operates. This of course has relevance both to the life insurance market and also general insurance market, but mainly we will be discussing about life insurance matters. Okay. In the examinations, you will be getting at least 3 questions from this lesson, chapter 1, which means 3 marks. You will be getting 3 marks from the questions which will appear from this chapter. What are we supposed to know from this chapter? Learning objectives. First, we should be able to understand what is insurance and its need, and why do people require it. Then how insurance works. Next, role of financial services sector, and within that the role of the insurance sector in building the country's economy, that we will be studying very briefly. Then benefits brought about by a professional insurance market, we shall see what are the benefits brought about by a professional insurance market, what it is we have to see. Then history of insurance in India together with the recent developments in the insurance industry. Then structure of the insurance market, how it is constituted and all that. Then different types of insurance organizations and various roles in the insurance industry, we shall be also briefly discussing about that. Then how the insurance products are distributed. Are they distributed directly or indirectly? All these things we shall be examining. Then types of insurance products available in the market. What are the various insurance products which are available in the market? Lastly, role and functions of an insurance agent. You want to become an insurance agent. So, what is your role and what are your functions? These things also we are going to discuss in this class. Then what is insurance? You wanted to become an insurance agent, but what is insurance? Insurance, they say, is a contract between the insurer and the insured. Insurer is the insurance company, insured is the policy holder. So, it is a contract between the insurance company and the policy holder. In return for some consideration called the premium, the company promises to pay a specified amount on the happening of a specified event. For example, in life insurance, the life insurance company promises to pay a certain amount either on the death of the customer or on the maturity of the policy to the end, or both. So, that is the definition of an insurance contract. And then why do we require insurance? What is the need for insurance is our next subject which we have to study. For example, life insurance provides protection to a family on the untimely death of the income provider. Most families even now, they depend upon the income of one person. One person earns and about 5 or 6 members are there in the family. If he dies, the whole family is undone. So, if life insurance is there, it will provide support to the family. Then the money received from the life insurance company can help to support one's family and ensures from financial loss. So, this is one reason why people go in. We are here talking about life insurance, not general insurance. So, life insurance is mainly important for family protection. If the breadwinner dies, the life insurance amounts will come to the rescue of the family. Then how does insurance work? That is the next question. How to manage risk? How to take care of the problems we are going to face? Because so many risks are there and how are we going to manage it. For that there are two types, one risk retention and the other is risk transfer. Risk retention means we do not do anything about risk, we just allow it to come, we want to face it ourselves, that is risk retention. That is not a good practice, because the whole family may be paralyzed and the whole family may be undone if the breadwinner dies. That you cannot say, I will not think about that. Do not retain the risk. Risk retention is good for large corporations like the RTC, which has about 20,000 buses or more. If all the buses are to be insured, the premium may come to some crores, even the loss will not be so much. So, such people can hope to have risk retention, but for individuals like us, you should risk transfer is our system. Transfer the risk to somebody who is prepared to take care of it. Who is that somebody? Insurance company. If you pay premium to the insurance company, they will take over that risk and they will bear it for you. In case there is a risk, they will take care of it, they will compensate your family for that. So, risk transfer is the ideal solution for risk management. Risk retention is not the proper system. Now, we have the financial services sector. What is this financial services sector? It consists of all banks, insurance companies, etc., a number of companies. The financial services sector helps the country's economy also, helps the people also. And insurance companies are part of that financial services sector. And what are they trying to do for the country and for the individual? That we shall see. Now, the first thing is they protect people from financial loss. Financial services sector, especially the life insurance companies, which are part of that sector, they help to protect people from financial loss. That is the first job. Then the second thing is they provide employment. How? A number of life insurance companies are there in India. They themselves are offering a number of jobs to many people. Many lakhs of people are working as agents and many thousands of people are staff members in insurance companies. So, directly they are providing a lot of employment in the country, and indirectly also they help to generate employment. How? They will be investing a lot of money, in so many businesses, and as the businesses grow, there are more and more vacancies in the companies. So, both directly and indirectly, the insurance companies which form part of the financial services sector are helping. Number one, they protect the people from the losses. For example, the general insurance companies, they protect you from the loss of your properties. The life insurance companies, they protect the families from the loss which arises in case the breadwinner dies. Lastly, a country like India is a developing country, and we need lakhs of crores to build up the infrastructure. Infrastructure means irrigation, housing, water supply, then drainage, then the roads and the bridges, ports, airports, power projects. All these are necessary to have a good infrastructure, which alone will help the people and the businesses. For that, lots of funds are required, and insurance companies, particularly life insurance companies, have got lots of money to invest in businesses. Now, why life insurance companies alone will be having huge funds? Life insurance companies handle long-term contracts. A policy may be for 15 years or 20 years or 25 years, and the customer goes on paying the premium, and most of the payments will have to be made at the end of the term. So, during the period, life insurance companies will have huge funds to invest. By investing them, they are not only providing employment to a number of people, they are also providing the infrastructure so necessary for the country to grow economically. Then, and what are the benefits to the policy holder? From the financial sector, we have seen what benefits the country is getting. So, what are the advantages to the policy holder or the people, individuals? Number one, investment option. If you want to invest in life insurance, there are so many options. It all depends upon your risk appetite. Risk appetite means some people, especially young people, are prepared to take up high risk. Old people are only prepared for a low risk, and middle aged people may prefer a medium risk. So, depending upon your risk appetite, you can take policies. I am talking about the policies which have the investment element also, like the ULIPs, unit linked insurance products, and you will have a lot of returns on your investments also. You will have life insurance protection also, all through the term of the policy. So, investment option is the advantage to the policy holders from the financial services sector. The second is the protection of financial security. Financial security is the most important thing any employee would like to have, any individual would like to have. That comes from life insurance and general insurance. General insurance companies will take care of your properties. If you insure your house, if you insure your properties, should something happen to the properties, the insurance company will fully reimburse the loss. So, they are offering financial security for the properties, not only for the properties, but also for the lives of the people. As I told you already, in case a breadwinner dies, the family is ruined, and life insurance amounts will help the policy to partly bear the loss. Now, one thing we have to remember, and that is, insurance companies will only compensate for the financial loss or the economic loss. They will only compensate the economic loss. The sentimental losses nobody can take care of. If a breadwinner dies, we can arrange some income for the family. Children can't get a father, wife cannot get a husband. So, we are prepared to compensate the economic losses only, not the other losses. Now, another thing is, we cannot prevent the peril from happening. Insurance companies, just because you are insured, we cannot prevent death from striking you. We cannot prevent the peril from happening, but we will try to compensate part of the loss or the whole of the loss according to the policies taken by you. Then, planning for life stage needs. Life insurance policy is not a one-time affair. You have to start taking policies from a very early age, and you go on taking policies right till the end of your career. In the beginning, when you are just a new employee for the first time, you may like to take a policy, a term assurance policy, which will simply cover risk on your life. There is no investment element in that policy at all, because it has no maturity value. So, to begin with, you may like to take a term assurance policy. As you marry and as the family expands, you like to take policies for your children's education, for children's marriages, and for other expenses which are likely to strike you. All the while, family protection has to be there. Term assurance policy, as we call it, we shall speak about it afterwards. So, we take that. And as the person enters the middle age and all that, he thinks about his retirement. He has to plan for his retirement income, and he may like to take an annuity policy or a pension plan or a savings plan, because his stress is now on retirement income. Family protection is one thing, retirement income is another. So, these are the various benefits to the policy holder and the various needs which will arise during the course of our career. Now, a professional insurance market has to be there. Unfortunately, we are still to get that market. A professional insurance market. What exactly is a professional insurance market? A professional insurance market means they are interested only in selling need-based policies. If you are a professional agent, you should always think about selling, not the policy which will bring you the largest amount of commission or any such thing. You don't think from your point of view or from the company's point of view, but you think from the customer's point of view. What are his needs and what policies will adequately meet those needs? If you are like that, you are a professional. So, the professional insurance market is always need based. They always sell need based policies which will adequately take care of the needs of the customers. Another point is, there should be transparency. You have to disclose everything correctly. Don't try to hide anything from the customer. He has a right to know. For example, if you have taken a unit linked insurance product, you must very clearly tell the customer how much of the premium is going towards investment, how much of the premium is going towards the life insurance cover and how much premium goes towards the expenses of maintaining the plan. All these things in no uncertain terms you have to tell the customer, and IRDA has recently been insisting on this. The customer has a right to know what you are doing with his money. Where the professional insurance market is there, you are taking of the customer's needs, you are also very transparent, you are disclosing everything. Customers' confidence will be there. Policy holders will have higher confidence in your insurance company. So what will they do? They will take more and more policies. They will tell their friends about your policies. They will tell their relations also regarding your policies. So business will increase. There will be deeper penetration into the market. All these advantages will be there. Higher confidence among policy holders, increase in insurance protection. Then social benefits. What are the social benefits if life insurance increases? Naturally, the society means the families. The society is composed of a number of families, and if all the families are protected from the dangers of death to the breadwinner, it is a secure society. The society is not having any uncertainties. All the dangers are taken care of by insurance policies. So we have a secure society. That is the benefit to the society. Then employment generation also is there. As I said, if your insurance business increases, if you penetrate deeper and deeper into the market, number of policies are sold and you are getting a lot of profit. You are getting lots of profits and you have to appoint more agents and more staff members. So employment generation also is there, which is good for the economy, and family protections are also there, which take care of the families. So life insurance is not just useful for a few individuals. It is useful for the whole country. It is useful for the country. It is useful for the companies, insurance companies. It is also useful for the individuals. We shall now examine the history of life insurance and general insurance in India. The history of insurance in India can be divided into three phases. First is the phase 1, pre-liberalization. Second is phase 2, liberalization. Phase 3, post-liberalization. What is this liberalization? Liberalization is nothing but removing some restrictions. For example, prior to the year 2000, LIC of India, Life Insurance Corporation of India, was having the monopoly to transact life insurance business. Nobody else in India could do it. And the General Insurance Corporation of India, with its 4 subsidiaries, United India Insurance Company, National Insurance Company, Oriental Insurance Company, and New India Insurance Company, they alone had the monopoly to transact general insurance business in India. That is not correct, because we will talk about it afterwards. First, what is this pre-liberalization? Insurance began in India with the starting of Oriental Life Insurance Company in Calcutta in 1818. That was the beginning. And afterwards in Bombay, Bombay Mutual Life Insurance Company and 2 other companies were started. And after that, one by one, a number of companies were started. That was so 1818 marks the beginning of insurance industry in India. When a new industry comes, the government has to regulate that. Naturally, they have to pass some acts. The first act was passed in 1912. The first act to regulate life insurance business and general insurance business was passed in 1912. After that, in 1928, another act was passed. Subsequently, they were both repealed and the Insurance Act 1938 was passed. Now, Insurance Act 1938 is very important. It is also exhaustive and comprehensive. It takes care of all the controls which are necessary to regulate the insurance companies. And even today, we have the same act with some amendments. So, this marks the regulation. Regulation started. So, like that it all began. In the 50s, number of insurance companies were there. In the 50s, number of insurance companies were there. There was a lot of competition between the companies, very keen competition, you may call it cutthroat competition. So, the government was not happy about that. Several unfair trade practices also were observed here and there. So, the central government decided life insurance business will have to be nationalized. So, all the 254 life insurance companies in India were taken over by central government, and they were all fused into one, and they called it LIC of India. So, LIC of India, the nationalized life insurance company, it was formed from the 254 private life insurance companies. And in 1972, general insurance business also was nationalized. And then it went on like that for a very long time. Now, as you know, in 1991, we began some financial reforms when Mr. P. V. Narasimha Rao was the Prime Minister and when Mr. Manmohan Singh was the Finance Minister. We initiated a number of reforms. And one of the main points in the reforms is no subsidiaries, no monopolies. There should be no monopolies in any trade. There should be a lot of competition. When a lot of competition is there, the rates will be low and the customer care also will be much better. So, the Malhotra committee, which was formed in 1993, they recommended that the time has come to strike down all monopolies. Hereafter, private companies, all the restrictions on allowing private companies into the field should be removed. That is liberalization. And anybody, any private company can form a life insurance company and enter into the field. Even foreign companies were allowed. But one thing, they cannot open their branch here. They have to find a local partner. They have to find a local Indian partner. They have to form a joint venture and they can enter the insurance market. Number of companies came from abroad and they found their partners. So, now about 50 insurance companies or more are there, both in life insurance and general insurance. So, this is the liberalization. Restrictions were all removed. Then post liberalization, what happened after the liberalization? As formerly there was no proper regulator for life insurance companies and general insurance companies. Just as the Reserve Bank controls all the banks, there was a regulator, but no proper regulator was there. So, the IRDA was formed. The IRDA Act 1999 became law in 2000 and the IRDA came into being. IRDA stands for Insurance Regulatory and Development Authority. So, after IRDA has come, they have been bringing about a number of changes to improve the business because that is their sole job. Their main idea is to see that any number of companies can come into the field, but all of course they have to follow the regulations framed from time to time. Secondly, IRDA is now, it turned its focus to the customer. Customer should have a good deal. He should get a good deal. For that, they have made a number of regulations which take care of the customer. Because formerly big companies were there and the small customer was very helpless before the big companies. Now they have introduced a number of regulations to see that companies adequately take care of the interests of the customers. So, that is the post-liberalization phase. Then we shall briefly discuss what are the recent developments in India in the insurance industry. I told you in 2000 the liberalization started. The IRDA Act became law in the year 2000 and from that in all these 12 years, what has happened to the life insurance companies and the general insurance companies? What exactly is taking place? First and foremost is growing importance of IT, information technology. Now, every insurance company is making use of IT in all the activities of the company. Formerly, printed receipts were issued. Now, a computer generated receipt is issued. Letters, everything. IT is taking care of most of the administrative matters of insurance companies. And this is for the benefit of the company also. It is also for the convenience of the customer. So, this growing importance of IT is one important change which has come about after the liberalization. Then bank assurance. What is this bank assurance? Bank assurance means life insurance companies and general insurance companies, they market insurance through banks. This is a good step because banks will be having a number of branches. There are banks with about 2000 branches or more. So when you market a product through the banks, you are able to reach many people whom you cannot otherwise reach. So through banks, number of policies are being told, and this is increasing the penetration and the manner in which we are reaching more and more people through bank assurance. Bank assurance is very popular because the customer need not go to a doctor, need not fill up a form and go to the insurance company for a policy. The customer of a bank can go to his manager, sign a small chit, and he is insured for 1 lakh already. So insurance is made easy. It has also been brought within the reach of most people, and we are able to reach far and wide. Then online sales. Formerly, if you want a policy, you have to fill in a proposal, go to a medical examiner, and all these cumbersome procedures were there. Now, online policies are being issued by almost all the companies. What they do is, through internet, they are selling the policies. The policy holder, the proposer as we call him, before the proposal becomes a policy, he submits his proposal online, it is accepted online, the payment also is made online, and the customer gets a policy. Now this is done without the help of an agent. So this is a direct sale. So this is easily the customer is getting a policy, and he is getting it cheaper also, in a cheaper manner also. The reason is like this: when there is an online sale, no intermediary is there, no agent, no broker is there. So the broker's commission and the agent's commission is passed on to the customer by way of a reduction in the premium. So these are quicker also, they are cheaper also. So online sales are increasing. Then a new feature of the recent times is micro insurance. Micro insurance means generally for life insurance companies, the lowest sum assured will be 50,000 rupees. If you want to take a very small policy, the small policy sum assured is 50,000. That may be a small amount for you and me, but for people living below the poverty line, it is a big amount. They cannot afford to take a policy and pay the yearly premium or half yearly premium. So for their sake, they also require protection from the perils of life. So to take care of the people living below the poverty line, the micro insurance policies have been issued. These are within the reach of almost everybody because the sum assured can be as low as 5,000 rupees and the premium can be as low as 15 rupees a week. So a number of people who are not earlier insured are now insured because micro insurance has come, making it easy even for people of lower classes to take a policy without any difficulty. Lastly, grievance redressal. If a customer has got a grievance, it has to be redressed. If any company wants to grow, if any company wants to succeed, they have to take care of the customers. There is no other course of action. That is being increasingly realized only in recent times. So IRDA said every insurance company, they have to take greater care of the customers because he is your customer for 15 years, 20 years, 25 years. And throughout the long journey, many problems may arise. And when he comes to you, you should give him a quick solution. So IRDA, or the Insurance Regulatory and Development Authority, has been insisting that every insurance company should have a grievance redressal department, and all the grievances should be taken care of by the topmost people, and redressal should be immediate and fully satisfactory. And they have also established an insurance ombudsman. Formerly the bank ombudsman was there, but insurance ombudsman was not there. Now an insurance ombudsman also is there. And IRDA itself has opened a line. Any customer can dial that number direct, and any of his complaints can be taken care of directly by the IRDA. The very fact that IRDA is having a number for grievances, all companies will be taking care of every grievance which comes to their notice. Otherwise, if it comes to the notice of IRDA, they will get a bad name. So, a lot is being done to redress the grievances of the customers. This also is a very important aspect of customer care.